mortgage, and I make these videos to help educate you on home lending so you can make better financial decisions to propel yourself ahead financially. I've been asked a lot recently about the difference between a cash out refinance, home equity line of credit, and a second mortgage. And what's the best loan to go after in anyone's given situation? I want to go ahead and break this down a little bit for you, and it's not that complicated. I actually think it's very simple. And after this video, my hopes are is that you understand the difference between the cash out refinance, home equity line of credit, and a second mortgage, and which one may be good. And this came up yesterday for me because one of my clients actually called and said, "Hey, I've been solicited by a bank to do a cash out refinance or just a rate and term refinance. I think it was, and they're saying they can lower my payment." I went ahead and take a look at his loan. He had a 2.25% interest rate from about 2021, and they were trying to refinance him into a 6.5% interest rate. It wasn't going to lower his payment. It wasn't a good deal any way around. But we did get into a conversation of, hey, I have about $80,000 in my home of equity. What if I needed that to pay off some debt or put my kid through college or do some investing? So we wanted to go into the difference between cash out refinance, home equity line of credit, and a second loan. So let's get into that right now. I'm going to go ahead and pull up a sheet that I had seen on the differences here. So let's take a look at that. A cash out refinance. What is it? When do you want to use it? So a cash out refinance is essentially taking money out of your home that's equity and pulling it all out at one time and getting usually like a 15 or 30-year term loan that's fixed rate on it and paying off your current home loan for a brand new home loan that's a home loan just bigger. So that may or may not be the best thing to do. It could be a great thing to do if your interest rates are going to be lower now when you do a cash out refinance, so you can pull money out of the home, get a lower interest rate, possibly get a even a lower payment than you currently have without taking the money out. But that's not the situation we find ourselves right now. Take a look at the notes here. Requires existing loan be refinanced, so you totally pay off your existing loan. May be favorable if rates have dropped, like I said. A single loan that can be 30-year fixed. So it's actually a term loan. It means it's going to last for a certain amount of time, just like any other mortgage. When it gets paid off, it gets closed. And then you must use the entire amount. So you're pulling out or you're getting a loan for the entire loan amount and you're paying off your existing loans. It's just a brand new mortgage, right? So maybe a great thing to do, consolidate debt. But if you're going from like a 2% interest rate to a 6% interest rate, probably not the best thing to do. Let's go ahead and take a look at that HELOC now. Home equity line of credit is what they call a HELOC. This is a second mortgage on your home, but it's a line of credit on your home, not a term loan. It's a credit, or we call you could consider a revolving loan. What are some other revolving loans that you might have? Think about it like a credit card. If you go pull out 20 grand on a credit card to make a payment, and then you pay off that $20,000 a month later, it doesn't close your credit card down. Your credit card stays open, so you can use it again and again and again. That's what a HELOC is. It's a revolving line of credit on your home. Usually has a term of about 10 years before you'd have to look in to get approved on it again, but it lasts for 10 years. You can use it for larger purchases that you're going to make for investing and other real estate. Make the purchase. Maybe you're going to do a rehab on a home and you need $30,000 to do it. You could pull $30,000 out on your HELOC, do all the renovations, sell the house, get the 30 grand back, pay your HELOC off. And now what do you have? You have that HELOC open up again so you can use it again. It's not going to get paid off and closed down. That's a big benefit of the HELOC. Some disadvantages: it is a variable rate, so it's tied usually to prime. So the rate's going to change a bit, as the market shifts. That could be worrisome for some, but that's just sort of the price of paying for credit of this nature. So no big deal there for most people. You can draw on it a lot, like multiple times. If you need 20 grand for a project you're doing, let's say you need to draw more on it later, you can do that. You can pay it all off and it stays open. So it is a great deal right there. Most of the time when you originate in a HELOC, a lot of those, like myself who originate, a lot of the closing costs can be cheaper than doing like a cash out refinance on a home, that kind of thing. And it's fairly simple to do and set up. So that's a variable rate revolving line of credit on your home. Typically, you can lend or take out as much as 90% of the equity you have in your house minus any other debt on the home. Let's look at a home equity loan. This is essentially a term loan, just like a traditional mortgage. So it usually lasts 15 to 30 years. You take it out behind your first mortgage, so it doesn't close down your first mortgage. That one stays intact, but it's a second mortgage on the home. Comes with its own interest rate that's usually fixed, so it doesn't no variable there, and it lasts for, like I said, 15 to 30 years. Typically, you have to pull out all of it. I guess it typically words wrong. You must pull out all of it at one time. So you're paying on all of it, whether you're using it for anything productive or not. As opposed to the HELOC, you're only going to pull out what you need typically, leave the rest in there. So you're only paying for what you need, just like you would on a credit card. I hope that's super helpful. Those are the difference between a cash out, a HELOC, and a home equity loan, or a second loan is what they call it. Cash out would be a primary home loan, a HELOC revolving line of credit. My name is Jed Barker. I'm with Best Life Mortgage. I originate home loans in South Carolina, Florida, Texas, and Georgia, and actually North Carolina as well. I'd love to originate your home loan for you, answer any questions you have. My number is 864-800-9251. If you like this video, if you thought it's helpful, if you give me a thumbs up, that'll help the YouTube algorithm share this with more people that need to have answers to these questions. Also, if you want more content like this, just consider subscribing to my channel. But I appreciate you. I look forward to serving you. I look forward to the next video. Thanks. Bye-bye.